I want you to stop trading until you understand this one simple concept. Once you understand this simple little concept, you will allow yourself to remove all of the emotional pressure off of your trading, remove any discrepancies from your trading rules, and learn how to criteriarize your trading model, which is going to allow you to make it easy to backtest, collect data over thousands of trades over the past 5-10 years, which is going to give you all of the confidence in the world when approaching a prop firm account or a challenge account and consistently maintaining payouts on your funded account. Now, instead of trading off of a strategy that you saw on YouTube that looks like it works amazingly, and when you actually go and execute that live, you're losing trade after trade after trade. And this is the thing with trading. It's a very personal journey. The number one FTMO trader in the world, perhaps he has a 70% win rate. He can give you his strategy. It doesn't mean you're going to be profitable. You still need to go and backtest, forward test, and live trade thousands of trades before you understand the model and start seeing your A+ criteria. In this video, I'm going to hand feed you my 7 criteria 4-hour time frame trading model that gets me, or used to get me, about a 61% win rate over 1,000 trades across 10 years of data, which is reflected very nicely in my live performance as well, and 2 extra A+ setup criteria that I've now added to this model that has increased my win rate to about 74% over the period of about 500 trades, just slightly eliminating more of those B setups. So therefore, when I approach a challenge account, when I buy 100 or 200k a challenge account, I've got all of the confidence in the world that this account will do well, or that my age will be fine, because the difference is I am now trading a fixed criteria model based on rules that is proven through thousands of trades, instead of just trading something that I think that works. It allows you to maintain your discipline and your emotional edge once you have that criteria in place for each and every trade. And this applies for any style of trading, whether you're ICT, whether you're support resistance breakout trader, smart money concepts. This is what works for me, and this is what I've been trading time and time again to help my students and my staff get funded and maintain our payouts on a consistent basis. A prop firm that I most recently got funded with is goatfundedtrader.com. How did I find them? Very simple. I use a website called propfirmmatch.com, which is a ranking website for pretty much the top prop firms in the world. And all I make sure I choose from is any of the firms in the top 10. And recently, Goat Funded Trader has just entered the top 10, which I'm very excited about. This is what their platform looks like on Match Trader, which is my favorite platform. It's kind of like TradingView, where you can place your buy and sell limits, execute your trades. They do have an auto risk calculator in. It's currently Sunday, so I'm not able to place or show you how it works. Maybe I can. Yeah, okay, so it won't allow me to execute an order or at least set it up. I'll have to make a separate video on that, but very simple. If you search up a video on YouTube, you will find a tutorial on this. Really clean platform, spreads are amazing and very competitive to the other firms that I am with as well. And I'm definitely looking forward to scaling my portfolio with Goat Funded Trader. If you want to get 20% off of Goat Funded Trader from any account size from the 5 to the 150k, you can simply click on by starting challenge now. It'll take you to the checkout page. Click on enter coupon and enter the coupon code MATCH, M-A-T-C-H. Click on apply coupon, and it will take 20% off of your order, saving you a good amount of money. Okay, before you go and do this, before you tackle a prop firm challenge, because this is a big problem that I see amongst a lot of traders, the money looks attractive. That 100k account, that shiny capital looks very attractive. A lot of traders, without having a proven model or proven criteria, will go and tackle a challenge account, fail it time and time again, and wonder why. It's because people are too eager to make money in trading. The only way you're going to make money in trading is if you put all of your focus away from the actual money and you put 100% of your effort into your skill set. And that is what I'm going to help you with today. So before you go and do this, before you go and order a challenge with Goat Funded Trader or your prop firm of choice, I'm just recommending Goat Funded Trader. Recently, I'm due for my first payout with them, so I'm excited to see how the process goes. I'll keep that updated with you. And also their pricing is very competitive and their conditions are very good. This is my 6 higher time frame criteria model on the 4-hour time frame that allows me to get funded and maintain payouts time and time again, with an added few extra A+ confluence criteria. So firstly, we're looking for, before we hop into the live charts, I'll recap a couple of trades that I took, wins and losses, and then I will go over in the next video, a backtesting session with you. Firstly, we're looking for our simple structure story. Are we creating strong protected lows or strong protected highs? Okay, are we in a bearish or bullish market? Secondly, after that, once we've identified our break of structure, what qualifies as a strong low is if that strong low was created after a liquidity sweep. That's key here. So that's criteria number 2. Criteria number 3, or 4 now, our order block, supply or demand zone that was created after that strong low that was created after a liquidity sweep. Fifthly, did that order block create volume? Another word for fair value gap or imbalance. And is that order block below the 71 fib? 71 fib, is it below? So those are the 6 required criteria for a setup to be valid. I will show you one example of a win and one example of a loss, and then I'll explain why. So let's start off with the win. Let's first start off with a recent win that I took on NZD-JPY, and then I will cover a loss or two as well and show you why that loss was lower probability, or why the trade was lower probability. And yes, I'm going to use the TradingView replay tool. And before you go and comment down below, oh, it's just replay tool, you could have seen this in the past. I took this trade lifetime on my Gold Funded account. And also, I'm doing it this way because I want to rather show you, instead of the full setup, step by step of how to check off your criteria for each and every trade plan that will allow you to start seeing it yourself, and that you can go and backtest this yourself and form your edge yourself. Okay, so the first, most recent thing I'm looking for, criteria number 1, is our markup, structure break. Okay, here we had a break of structure to the upside and a clear break of structure to the downside. What we need to ask ourselves was the strong high that created the most recent break of structure to the downside created after a liquidity sweep? And specifically, did that liquidity sweep a strong structural high? Okay, as we taught, price creates higher highs or lower lows, right? But remember, price doesn't move like this. How price will move is potentially a break of structure to the downside, a sweep of that strong low, then a break, a new break, a sweep of that strong low, a new break. So what a lot of people are seeing this as a break of structure to the downside is actually a liquidity sweep. Now, strong highs and lows is the strongest form of liquidity. Yes, we know they're supposed to be protected, but they also are used as liquidity, and they are much stronger than equal lows or standard inducement, simply because in order for a liquid instrument, such as a chart with buy and sell orders, to break structure on that liquid instrument, there's a hell of a lot of volume and institutional involvement from that move. So we know those areas are very high areas of interest. Okay, so that is why any structure break for me is not valid. Here's an example. Here's an example of what I would not consider structure. Here we had a structure break to the downside, right? Pullback, break a structure to the downside, strong protected high. This high did not sweep previous liquidity. So therefore for me, that's not considered a strong high. So what happens was we use that strong high for liquidity. Okay, so just an example of what I consider a structure break and what I don't. So here we had a break of structure to the downside. Okay, we had a high that was swept, but the significant thing for me for this high is that this high also internally broke structure to the downside. So what was that? That was a strong protected high that we swept. A sweep of that high that broke structure to the downside. Because this was a pullback and a break, we then broke structure to the downside. Okay, making this a strong protected high. We swept that high, then broke structure to the downside. So if we check off our criteria, we have a break of structure. Number 1, let's put this in a list here. Number 1, we have a break of structure. Number 2, it was caused by a strong high LQ sweep. Okay, number 3, do we have an order block that was created? Well, this is a beautiful example of a supply zone right here. Number 4, did the order block create immediate volume? Well, here we have a fair value gap, and here we have a partial fair value gap that is unmitigated. So yes, the order block created volume. Number 5, is the order block above or below the fib? In this instance, because it's a short setup, we need to see the order block above the 71 fib. Okay, so if I fast forward through, just waiting for the pullback. Okay, that's significant enough. So if I take my fib from the high to the low, we can see our 71 fib, and the order block is now above that. Can you guys comment down below, based on the criteria, why this order block is not valid? Because this high that created the structure break was not created after a liquidity sweep. It just created equal highs. Okay, so that means there's going to be good probability we're going to use this past liquidity strong high, or the strong high liquidity, as a sweep, as fuel for the move from that order block. So let's dive into our A+ criteria. We have our order block, supply demand zone. It has created volume. Okay, number 5, it is above the fib. Our A+ criteria are the following. Does the fair value gap that was created by the order block after the sweep that created the break of structure, did it create volume? Yes, it did. And does that volume hold strong high liquidity? Well, here we had a pullback and then a break. So what does that make this? A strong protected high. So that now becomes strong high liquidity. So we have that in this leg. Okay, so number 1 is the FEG, or volume, created by the order block has strong high LQ. Obviously, in a bullish scenario, we'll need to see strong low liquidity. Number 2 is, did the high sweep strong high liquidity? This high swept strong high liquidity. So yes, we had a strong high sweep. 3, the order block, did it create immediate volume? Yes, we have immediate volume. So there is immediate volume from the OB. And then finally, the type of pullback. Created a bit of a graph for you guys just to show you what type of pullback is A+ and not. So essentially what I look for is a sweeping pullback or a corrective pullback with relatively equal lows, or a structure story with either lower lows, lower highs, or vice versa. We don't want to see 1 or 2 candle aggressive pullbacks into our area of interest, as that lowers the probability of the setup. Okay, so right now we have a pullback, break. So yes, we are starting to see a bit of a correction here. This is not just 1 candle or 2 very bullish candles up. We're getting a bit of structure forming, which I so far like. So in this scenario, we have all of our criteria in place. This is now an A+ setup. This is my risk management rules, which is also criteriaized. I initially enter 1 position on the fib, targeting the low at a mechanical 2.45R. And then another position on the order block at just 2 risk to reward. Okay, in my scenario, or the specific scenario of this trade, when the order block hits TP, every trade, I set break even on the fib, because that's 2 risk to reward guaranteed. So whether the fib runs or not, it's 2% or 2R gained. Okay, but in the scenario where the order block is high up, obviously TP at the order block, we're still in drawdown on the fib. We would just need to wait for the fib to at least run maybe 1R or so before we set break even. Okay, so let's see and continue how this order block, or how the pullback goes. Okay, beautiful. More liquidity builds up. This is definitely a corrective pullback. So here we can just adjust our fib, move our entry to the 71. That's the 71 fib, by the way. Okay, we've tapped into the fib, we've tapped into the order block, and this is how this trade played out. So yes, this was a full TP. Now I know this is one example, but what I want you to see is the criteria as we mark it up. Don't worry too much about the outcome of the trade. The important thing that I want you to learn is how to identify your criteria and start practicing that. Okay, let's go over an example of a loss and why it was a low probability trade. So this was a recent half risk trade that I took on XAU USD. Okay, so before all of you go and smash me in the comments, I know, how on earth can you short gold in such a bullish market? It was a good setup, but a lot of my A+ criteria wasn't there. And those are the setup that most of the time you will find are your losers. And just a bit of a side note, when you do go through a bit of a losing streak in your trading, which you are going to, use that as a time to refine your model. Go through all of your losses, journal all of your trades, and identify a common denominator on what's causing your losses. How do you think I learned about the criteria? The pullbacks, this was an awful, extremely bullish momentum pullback. No correction, no structure, no liquidity pulling pullback either. Okay, so the same thing, we had a liquidity sweep and then a break of structure, a strong protected high. But what made this difference was we had a liquidity sweep, but this high didn't break structure. It wasn't a strong high or low sweep. Okay, yes, the order block created immediate volume, but there was no liquidity in the leg for this fair value gap and for the order block. So that's why I've got here fair value gap with strong high or low liquidity in a red X because it wasn't there. Corrective of sweeping pullback, we didn't have that. So this was only one out of the A+, the 5 A+ criteria, which is why this was lower probability. Okay. So hopefully you guys have a bit of a good introduction on my criteria. If you guys want a one-on-one with me and a free backtesting session with me live on Zoom call, just you and me, not all of us in one call, you can use, I'll leave a Calendly link in the description down below. And also I have a free Discord where I have all of the course content on this. All my stuff is free. The only thing I charge for is my one-on-one mentorship where I do live trading and that with you. But honestly, you don't need that to be profitable. And the reason why I charge for that is because it's a lot of my time. It's months of my time invested into you. We go from zero phase, building your model, to getting a challenge account, to then passing it and eventually getting consistent payouts with it as well. And I hold your hand throughout that entire journey. Whenever you want to hop onto a trade, you hop on a call with me and we go over your criteria. So it's a very thorough mentorship. I only work with maybe 2 to 3 people every couple of months. So it's not like it's available for everybody. The rest of my stuff is completely free. Okay, so with that being said, now's a good time to go and grab a challenge with Goat Funded Trader. I'm actually going to be in the process of this week of purchasing myself another one once my payout comes, and once I get my payout from them. And I'm going to use that to reinvest into more accounts. Inside of my community is a lot of backtesting videos. I've just created 2 more. It's all my backtesting content, the full higher time frame model course, as well as the foundations of each individual component, structure, our liquidity, our S&D zones, putting it all together, a bit of a psychological approach to how the mechanical side of trading is going to benefit you long term and improve your edge, and then a strategy I use to pass funding challenges, pretty much risk-free and guaranteed. And then I apply my proven model on the live account. So all of this is completely free. I will leave a link down below to this course and also a free one-on-one booking with me. Take care, guys. I'll see you in tomorrow's video or the next video.